Coinbase is handing out its shares to executives and employees like it's some kind of shit coin that's about to go under a fraction of a penny any day now. We got to talk about this. What is going on, investors? Hopefully, guys are doing well out there. Time to talk about Coinbase, ticker symbol coin, during the regular session, down over 12.5%, over $10.50, down to about $73 per share. But after reporting their Q1 numbers, well, the stock is dropping even more. We're seeing it down at close to $67 per share. We'll certainly come over here and talk about this from a technical perspective. This is like a falling knife falling from the moon or something. It looks like there is no gravity holding back this stock as it continues to go lower. We'll talk about some of the reasons why on today's show. Now, a lot of this is predicated on the fact that you have the company report their Q1 numbers. Also, it has to do with a little bit of Bitcoin. We see over the last quarter, Bitcoin actually traded in a pretty tight range. Now, more recently, it's broken to the downside, but it was trading between about 40 and 48,000. I tell you what, the more volatile Bitcoin happens to be, and I think from a retail perspective, the more it goes up, the more attractive it is, and certainly a transactional-based website like Coinbase certainly would benefit with higher volatility. And we saw the last quarter that we didn't have quite a volatile price in Bitcoin. As a side note, when you look at the Bitcoin chart, quite frankly, I think this is what the S&P 500 chart is going to look like. You're going to have a big down leg. You're going to go on a leg of sideways growth, and then chances are it'll probably dump to the downside. We'll see if Bitcoin is a leading indicator to what the S&P 500 and the equity markets end up doing. And if it is, could mean bad things ahead. Now, Coinbase's Q1 came in $1.16 billion. I tell you what, if you've been following the channel, you know that I've really liked some things about this company. When we come over here and look at these financials, they've completely deteriorated from a revenue growth perspective, from an operating income perspective, from a cash flow perspective. Everything is falling apart over at Coinbase. So I think there's a very, very orderly reason why this stock continues to go down. But is there hope? Is this company able to turn things around? Is this an investment year over at Coinbase? And we certainly got evidence of that when they reported their numbers. They gave us full year guidance. Essentially, they say that their outlook for 2022 is largely unchanged. But the fact is they're guiding to an adjusted EBITDA loss. Okay, that's adjusted EBITDA. That means the company gets to strip out certain things that they want to. They're expecting a $500 million loss on an adjusted basis. I'll come over here to the GAAP numbers. I'll show you what they really mean, and it's really, really bad. The other thing that's really, really bad for this company is not a lot of analysts are really projecting a lot of growth. For this year, they're expecting negative growth on that revenue side. The upcoming years, kind of high single digits, mid-teens on that growth rate. And then we have some analysts that are very bearish on the future of Coinbase, thinking that we'll actually have revenues contract. On the earnings side, similar type story that revenues are going to come in and so are profits over at Coinbase. Now, part of that is the fact that this company doesn't have a tremendously diversified revenue portfolio yet. They're trying to get into NFTs and some other segments of this market. Certainly in the longer run, Coinbase could be a fantastic company, but we're seeing in the most recent quarter, when you have a bad quarter from a volatility perspective and Bitcoin basically trades sideways, well, retail goes to the sideline. Notice that the retail print, this is trading volume of just retail clients. Notice that went out the window. In fact, it's the lowest on record that we have here. Institutional stayed in a range that you'd expect, but it is lower. I actually expect that institutional probably looked at this pattern and was probably trading it. That's why institutional trading volume kind of held up. Retail, not as sophisticated from a technical perspective, probably didn't understand how to trade this type of formation. So that trading volume essentially shriveled up. The other thing that you have over at Coinbase is just the nature of the product, this Bitcoin or any type of coin. Well, you can pull it off for the most part and put it into a cold wallet or like essentially like a USB stick and essentially have ownership of your Bitcoin in a physical item and not carry that onto Coinbase. And so we saw just a couple of days ago, over $700 million of Bitcoin leaves Coinbase. This certainly will impact the platform. We also saw the fact that their revenue per user also in the most recent quarter, basically at year lows. This is also showing you the immense competition that you have in this space. I've been seeing a lot of advertising for FTX. There's Coinbase.com. There's a number of places these days, obviously Robinhood. I mean, there's no shortage shortage of place to buy crypto, and obviously your revenue per user is going to come down as you have competition against very, very free and low-cost competition out there. We saw it in the most recent quarter. Take a look at our revenues. They absolutely shriveled up. In fact, they went down year over year on a quarterly basis from 1.8 billion down to 1.1 billion. That's a little bit of an eek. Now, look what's going up in the opposite direction. Oh no, our cost doubled. So our revenue went down by about $700 million and our cost more than doubled from 813 million up to 1.7. So it takes the one thing that we really, really loved from this company is that on $1.8 billion worth of revenue last year on a quarterly basis, this company had operating income of nearly 50%, coming in at $987 million. Quite frankly, that's maybe even more than 50% because you took this 1.8 billion and you minused off just $800 million in cost. Notice for this year, it basically went in the complete and utter other direction from 1.1 billion in revenue and 1.7 billion dollars in cost. We've swung from an operating profit to an operating loss on this one, down to $554 million. And if you take the company at its word from their financial guidance, it's not going to get better anytime soon. I'll show you from a stock-based compensation perspective, this company is investing heavily. Take a look at this. Technology and development from $184 million cost last year all the way up to $570 million. Look at the stock-based compensation that's baked into that. Essentially, half of those costs is stock-based compensation. The other thing that's very concerning to me is look at general and administrative from $121 million all the way up to $413 million, almost exceeding your technology and development costs. And not a ton of that was actually stock-based compensation. Yes, it's up tremendously, nearly threefold from last year at $27 million up to $80 million, but $80 million out of $413 million. Man, they spent a lot of money on just general administrative in the most recent quarter that drove up these operating expenses and absolutely shriveled up the profits over at Coinbase. One of the things that we actually really liked about this company, diluted shares also went up. I tell you what, when you're rewarding your employees and executives with that much stock-based compensation, your shares are going to go up. They almost doubled over the past year on a diluted basis. Look at the stock-based compensation in the most recent quarter at $352 million. Guys, that's over 30% of revenue. We're not talking about 30% of profits go to executives, employees. No, 30% of revenue is going to stock-based compensation. I've seen 10% of revenue like on a Shopify. I thought that was crazy. This is 30% of revenue in a quarter going to stock-based compensation. Yikes. Okay, so you pull down a disastrous net income number. Okay, last year we were positive from a net income perspective. This year you swung to a negative $430 million. Well, guess what? We get to add back in that big, gigantic stock-based compensation expense at $352 million. Last year you were just at 104. So we've more than tripled our stock-based compensation year over year. Our revenues have declined. Our expenses have ballooned. Our profits have swung to a loss. It gets worse and worse and worse when you go through these. And unfortunately, it gets even worse when you come down here to cash flows. Last year, you printed $3.4 billion. I don't know how much of that you can attribute all to Coinbase's business because you notice there's this big, gigantic $2.3 billion custodial funds due to customers. That swung to a negative in the most recent quarter. You went from positive cash flows of $3.4 billion to cash flow burning out of this company at $830 million. Some of that compensation could be too, especially on the general administrative side, due to the business combination that the company had. They recognized $186 million cost when it came to that. From a financing perspective, not a whole lot here because when you do come over to the balance sheet of this company, as a company that just recently went IPO and was actually printing profits on an operating basis, a net income, and a cash flow perspective, well, they weren't really burning through a lot of cash. They have over $6 billion. But what I did notice is customer custodial funds went from $10.5 billion down to 10 on the liability side. They recognized $10.5 billion in custodial funds down to 9.7. So we're seeing people pull their assets off of Coinbase since December. Is all of that have to do with Bitcoin, which quite frankly, if you look at when this quarter ended, it actually ended March 31st. From a capital gains perspective, Crypto, or in this case, Bitcoin, was basically even from a price perspective at the end of March compared to the end of December. So there wasn't a lot of change in fair value just in Bitcoin. Obviously, Ethereum and the other ones that they carry could have gone down. They could have gone up. That could have impacted this custodial funds, but we didn't see a massive decline in Bitcoin in the quarter. That would attribute to this. I think you having people pull their money off of Coinbase. You obviously saw some people are taking that to a cold wallet, but there's also other providers out there that allow you some liquidity or allow you to move your funds back and forth. We do have some long-term debt on this company as well, basically flat from a year-over-year perspective. From a financial perspective, I'm not overly concerned about this company. I am concerned the fact that we have swung to negative revenue growth. We've also swung from profits to absolutely disastrous results from the operating side. Now, Coinbase's chart looks like an absolute Japanese steak knife that just continues to fall and fall and fall. There's really not a whole lot to talk about here from a technical perspective. This drop is steep and fast. Will this stock bounce? Will it have rallies off of these bottom levels? Will some green candles show up? Absolutely. At some point, somebody will make kind of some bear case argument, or the shorts or the people that are selling this stock will have finally had enough. But in the shorter term, I don't see any reason to own this stock. Now, I have owned this stock at various levels. I continue to get stopped out of it. If you learn anything from me, it's that while the fundamentals in previous quarters have lined up to own Coinbase, well, I tell you what, the fundamentals of this stock chart just did not agree, and the market did not agree, and this stock just continues to decline and decline, and I would take small stop loss on the way down. If you get into a position like Coinbase, like any of these stocks that make a similar type chart pattern, there's a ton of stocks that look exactly like this that just have gigantic downtrends from over $360 per share on Coinbase all the way down to under $70 per share. If you do take a stab at these types of stocks, if you do buy the dip, set a stop loss shortly under that, because the momentum of these stocks, of the general stock market, you don't need me to tell you, is negative and continues to go lower, and stocks can be just as irrational on the way down as they were irrational, as it appears, on the way up. We've got south of a $15 billion market cap on this one. I tell you what, from this fundamental perspective, it probably doesn't even support that type of valuation, but we do have to factor in this company has cash and cash equivalents of over $6 billion. So you got to factor that into the valuation as well. At some point, this one probably does become too cheap, but considering the markets that we're in, there's a lot of far more quality stocks with less competition and a better future over the next 2 years than Coinbase that I'd probably rather take a swing on rather than this. That was Coinbase. Hopefully you guys enjoyed today's video. Back in soon with more. Good luck with your investments.